Hello guys and girls, and welcome to another episode of Quick Tips. In this episode, we're going to be covering forecasting, the overall importance of it, why we do it, and how we do it, and how this can really be a game changer for your trading results. So let's take a look at that. So forecasting, what is it? Forecasting, quite simply, is just you anticipating possible and multiple scenarios that the market can throw at you. The reason why this is important is because quite often the reason why people have these things like fear of missing out, hesitation, and fail to capitalize on positions is because they normally need the market to satisfy them. They need the market to pull back to a certain area, or they need to see all of these different things, when in fact, the psychology behind forecasting is essentially saying, this is what the market can do. These are the possibilities, either A, B, C, D, E, etc. This is what the market can possibly do. And then you have to have a type of entry for each one of those situations, because quite often people, when they're looking at positions, let's say it goes a little bit higher than they expected. If they was looking at a selling opportunity, they normally write the trade off, when in fact it could be creating a deeper version of itself. It could be creating a deeper pattern. And if you haven't forecasted that, it's likely you'll let that trade go, you'll look at something else, you'll look at it the day later, and then you'll see it went exactly the way you expected. It just created a deeper version of itself. So this has been an absolute game changer in Falcon and for myself over the years. So I want to dig into it with a few examples to show you how simple you can do it and how you can add it into your routine. So let's firstly start off with pound dollar. So with pound dollar, what I want to take you back to is the overall bigger structure first. So the forecasting really starts on the higher time frame. Now, if we look at the overall bigger daily structure, we're really looking at this big ascending channel as potential reversals. So within the structure, we're looking for that big selling opportunity. Now, within this section, we were anticipating the big sell. As you can now see, the trade has played out very, very nicely, and we've been anticipating this for weeks. But when we're forecasting, the main part where we're really getting into detail is on the 1 hour chart, but it starts with a higher time frame. So now we know the bigger, longer term structure. We're really looking at what kind of pattern identification we can focus on to really capitalize on that. And as you can zoom in here, this is a prime example of where a lot of people could fail to capitalize on these positions if you didn't forecast certain types of situations. Now, when you look within this area, most people would be looking at this particular structure here as a potential double top. You can even see we have a high test candle within there, which a lot of people would be caught out within that structure thinking it's going to sell off from here. But the most important thing that we're forecasting is 1, 2, 3. So we know multi-touch identification, 3 touches of the complete pattern is a very probable area with the overall double top type formation here. This would be a fantastic selling opportunity. So when we go to the 1 hour, there's a few areas in which that we need to forecast to make sure that we anticipate, because sometimes we don't always get the third touch, and we don't always need to. Sometimes we only need 2 touches. So how can that benefit us in this situation? Well, if we take a look at this structure, you can see we have 1, 2, and within this area, as you can see, we've got a pattern within a pattern. So we have this overall ascending channel, and then we have this ascending within the ascending, and another one here. But the most important part is, let's take ourselves back to this type of scenario here. When looking at this particular structure, we'd be anticipating that we're looking at a potential sell setup right at the top, but knowing that we don't have to. So we'd be looking in these areas, as you can see, with the overall double top area, as we just went right through that. So we'd be looking at possible selling opportunities here. But then what happens after that? This is where people often write off the trade. They see an impulse up, and now it's gone above what they expected. So we remove that, and then we start to make sense of, well, what possibly could this be? Is this just the start of an ascending channel to then drop to the downside at the third touch? Very, very likely. But knowing that it doesn't have to get to the top, what we'll do is this. If we start to play this slowly so you can see, as we impulse up, what would be the next forecast that we'd be looking at? Well, we have a couple of possible scenarios here. So understanding that we don't have to get to the top, what would give us an early indication that this could still be a trade? Well, what I'd be forecasting is a potential flag type continuation to the downside, as we could literally form a continuation here and we could drop from there. So I'd be anticipating that I'm looking for a sell setup here. And if I've got that, it still has a decent risk to reward and it could break all the way to that structure. Now, the reason why we're anticipating these ambitious forecasts is because the high time frame structure, as I outlined at the beginning, has such a big potential. And not to mention, if we look at it, we'll also be anticipating, well, we may even get that flag type continuation at the double top area. And if we get it at the double top area, we may even get something like this. And then we get an impulse candle, and then we get the retracement candle, which is what you've discovered in Quick Tips, the override. So you see all of the components that you're learning, they build together. So ideally, this double top, this arc type formation, we would get a tight correction, almost a continuation, the scoop type formation to then sell that. So we'd be selling it here. But then at the same time, we have to anticipate, well, what if we don't get that, clean setup? Then what happens? Well, if it moved up impulsively and then we got a retracement candle, that's still valid to come to the downside. So it's still a sell setup. But what often happens is something like that will happen. And because it wasn't very corrective and it wasn't exactly what, let's say, you needed to see, which is a wrong psychology, you'll then let that trade impulse up, retrace. Someone else will see it because they anticipated it, they forecasted it, they'll capitalize, they'll make 5%, and then you'll sit on your hands, and then you'll get frustrated because you say, well, it just didn't meet my criteria. That is when often we're bringing our ego too much into the markets, and that's only going to be there to sabotage us. And I know this because I've done it. I've been that guy for 2, 3, nearly 4 years of doing that. And only when I neutralized myself to understand what was possible for the last 4 to 5 years, it's been absolutely glorious with trading. So I encourage you to be as neutral as possible. And this skill, remember, forecasting, it's not going to happen overnight. You're not going to get every particular forecast right every single time, but you're building that skill. Just like you're training a muscle, you're training that muscle in your brain into your subconscious, and it's super powerful. And if we take that one step further, well, let's see, do we get the double top? As we move up, we break through. Well, again, this is another type of scenario where we think, well, we didn't get the double top, we haven't got the retracement candle, this wasn't corrective. Now what? Well, our next forecast would be that, well, it's potential that we may correct to here, move back up, and then move down. That would be my first initial thought process of a forecast, because we've got the impulse essentially now. This could create a small little buy setup, move to the upside, and then I'd be looking for some corrective nature at the top for the sell. So instantly, before it happens, hours and hours and hours before, I already know. So if the market presents something to me, I'm not going to be shocked. I'm going to have my alerts. I know exactly what to do because I planned it out maybe a day in advance, or 8 hours in advance, or maybe 4 hours in advance. And as we start to play out, there's another possible scenario that we expected, that we may get an ascending within an ascending, which we know is a very reliable, very common pattern within the Falcon strategy. So all it means, we have our 1, 2, and likely on that third touch area, we'll start to get an ascending channel within an ascending channel. So we get that pattern within the pattern, which is a very high probability setup. So when we look at that, we can then take that one step further and say, well, if we're getting at a structure higher, let's take a look at what kind of formation we get. And as you can start to see, especially here, you can see that we've now got the start of that ascending within the ascending. And being so close to that area, it's either going to go early or you're going to take it right at the top. Now, there's 2 ways you can approach this. Naturally, we know that it doesn't have to get right to the top. So you can, after we've had 6 to 8 hours of this correcting to the upside, you can essentially set an entry order and then just have your stop above the top of the structure to be on the safe side. So if you do get triggered in, then you know you're still above the high. That's something you could do worst case scenario. This is when I'm normally a little bit more patient, because backtesting has helped me to understand that the majority of the time when it's doing this, it does make it to the top of the structure. And a lot of the times it actually goes a bit higher, catches people on the wrong side of the pattern, and then it drops. So I'm never in that fear of missing out that, right, I need to put an entry on straight away. This is where, when I define patience, it's based on patterns. And I've seen these patterns play out time and time again. So as you can see, as we move up slightly higher, see again an impulse. And before we get that break, let's take that back slightly. So as you can see, as we impulse up here, the real override section, which this is a trade I know quite a few of you took as well, is this one here. So this is a prime example of a pattern within a pattern and an override. Now, after we actually get that break, of course, we create that evening star type formation for this to sell off anyway, which is another added bonus. But what the key thing is, this is all corrective. So 80-20 rule. Yes, there's one impulsive candle, but 80% of that move is corrective. So we know it's a correction. So we know there's likely to be no progression there and only a sell setup because it's a reversal. So the more and more we look at that, we can see just how simple that is. And then we get the high test doji type formation as our sell setup to then put an entry here at the top of the structure. So as you can see, if you entered a little bit early, your stop would still be there. Or if you waited, and then you could enter here. And if you really didn't capitalize on the top, it's possible for you to get in here because of this override of the evening star formation. So as you can see, if you forecast those possibilities, think about it. If you're doing that for multiple trades, how on earth are you going to miss out on opportunities? Your subconscious is prepared well in advance. And this is just one position with a few scenarios. So you can see just how simple you really need to keep it. And as it starts to play out, we normally get more opportunities. As you can see, as it breaks, we'd be anticipating that flag continuation. So we have another entry, and we'd be anticipating 6 to 8 hours, 1, 2, 3, 4, 5, 6. So the entry would already be on there, and a few more hours, and then it breaks. So quite simply, when you're forecasting these type of scenarios, it makes it a lot easier on your subconscious. Otherwise, I know what it's like. The market does something that you don't expect. You get shocked. You think that trade's not on anymore, and then you just leave it. This is why forecasting is so important and why we've seen such a dramatic increase in people's results within the community due to this. So if you're new or you haven't done it that much, I encourage you to take this very seriously because this is going to be a game changer for you. So that's how simple we keep it with the pound dollar and the forecasting overall. One little tip you can do as well, guys and girls, is that you can take screenshots of your overall forecasting. So let's say, for example, you wanted to take a screenshot and it was on the 1 hour. You may want to do exactly what I just showed you, but of course price has already happened. So if you imagine same thing here, for example, you may want to do a screenshot on the 1 hour chart of what you expect. So you could do something like this, a move up, a correction, a move up, something like this, and then you're looking for a sell setup. And then what you can do to take it one step further is you can get an annotation, and then you can put an annotation on here of something like sell at risk entry. So you could say sell at risk entry, you could have it on there, and then you could screenshot that. So then you know exactly that when that happens, you're going to do this. This is a really good exercise. And as well as back testing is really good, that you're always looking at things in hindsight. Back testing is there for you to understand that the strategy works. It's to understand how these structures behave and how they play out, and understand some characteristics of particular behavior of certain pairs. What is really going to change the game for you is forecasting, because that is getting your mind ready to, how am I going to enter? What am I going to do in every type of situation? Am I going to take a risk entry at the top, or am I going to wait for it to impulse correct and then take a reduced risk entry? When you know exactly what you're going to do when you're going to do it, you won't be shocked within the market. Most strategies, what they encourage is hesitation. They encourage the fear of missing out, but without you realizing it. And the thing is because when you're always waiting for the market to do something to satisfy you, then naturally that hesitation is going to creep in. And then when you start scaling your account up and you deal with bigger amounts of money, it then gets worse. So when you're dealing with something like this, the clarity you're going to get within the markets is going to be absolutely fantastic. Now, understand that forecasting takes a bit of time, but once you get it, don't be surprised how good of a trader you become and how you get those increases. So that's pound dollar. Keep your screenshots very simple with some simple annotations. You can just create a folder and create a forecasting folder before and after, and then take a look at them over the months and see how accurate you were. And then what you're going to be able to do is you're going to see that, well, I forecasted this possible scenario and I forecasted that possible scenario. What about this one? What you're going to do is you're going to be able to pinpoint, hold on a minute, I keep forecasting these two scenarios, but I seem to be missing that scenario, like an ascending channel or an override within the pattern. And then you're able to pinpoint it. That's the best thing as a trader, because then you're going to be able to say, well, hold on a minute, why do I keep not forecasting this? Is it because I don't understand how that particular pattern behaves? And then we can actually pinpoint it rather than you blaming so many different areas of what you don't know, when in reality, you probably know more than you think. There's just a few scenarios that you're not anticipating, which is holding you back from capitalizing on those big trades. And that's how simple it can really be. So I hope that helps with a quick tip, guys and girls. And I want to just show you one more quick example on New Zealand dollar. So let's take a look at that. So now let's take a look at New Zealand dollar. So this was a bit more relevant as this one was in last week's webinar. And when you look at the overall structure here, it is very, very important to understand that within this particular pattern, we're looking for potential buy setups. And why are we doing that? Well, if we go out to the daily chart, we can see we're anticipating this bigger, higher time frame structure as one big impulse and a big, ambitious, expanding type formation to take this to the upside. We know it's very much a potential. So any time within this structure, we know this could break out to the upside. So we're looking for buying opportunities with the idea that this could break. We know it's a possibility this could come down to one more low and then go to the upside, but it doesn't have to. So because it doesn't have to, we're still going to buy it and manage it accordingly. So on the 1 hour chart, you can see that we have that kind of formation. And let's take that back a little bit. So if we take a look at the current structure that we was looking at, we knew that we had multi-touch identification at this point. So we had 1, 2, and we're potentially looking for the third. So by looking for that third, we notice a complete pattern and that we can take it for a risk entry opportunity. If we can take it for a risk entry opportunity for about, really on this one, you can be actually a bit tighter, 20 pips, and that's being conservative. 20 pips and to the top is about 3%, and if it breaks out, you're in a fantastic trade. That's one type of scenario. What we're going to understand is that because we don't have to get the third touch, what can we do in that situation as an override or as a backup plan that we can still capitalize on the trade? Well, we know we've on the second touch we've really impulsed up, so we can essentially class that as the pole of a potential flag, as a continuation. All we need is 6 to 8 hours, then we can set an entry above as a continuation to the upside. But we also can understand that what we may get is a very corrective nature like this, and then we don't get all the way to the third touch, but it's still a continuation. And as long as it's had 6 to 8 hours, that can still break to the upside. So there's a few types of variables and scenarios. Ideally, we want the one at the third touch at the bottom, third touch, risk entry, impulse, correction, continuation pattern. That's why we're looking at that. But we know that we don't always have to get it. So again, understanding the possibilities. So after we get a few hours, as you can see, that went a little bit too fast, but you can see 1, 2, 3, 4, 5, 6, 7. We had more than enough. We had maybe 3 or 4 hours after to still be able to take the trade. And of course our entry, which is an entry I took, which I know a lot of you took as well. I actually got in here with a 20 pip stop, and my entry was just there. But as you can see, I'm anticipating that this is going to break out. That's why I'm taking the trade. I'm not aiming for a 2-to-1 or a 1-to-1 or anything like that, because we forecasted a high time frame structure. It's more about, can we take the trade and remove risk at the first sensible opportunity? If it goes back up and comes back down, we'll reassess it. So that's absolutely fine. And we can always take that one step further and still forecast, well, if this impulse is up, because we haven't had the third touch, we could do this. Create an ascending channel, an ascending within an ascending, and still come back down for one more touch and then go. So there's a few scenarios that are playing out in my head, even though I'm in the buy. We know that's very much a possibility. And as we can see, if we start to play that a little bit slower, we start to break out. Of course, at this stage, we can move to break even. We've impulsed enough, we've impulsed away, and that's exactly how we can take it. But if you imagine, if we was only focusing on, well, I want this to go here. Remember the psychology, I want this, I need to see this. This is a common thing within people's psychology, and it's not your fault. It's normally come from old strategies and old habits, old beliefs, but you don't need it. You really don't need that within your psychology, because there will be within the future, especially as you scale your account up, some of the biggest trades of your life. And if you forever want the market to do something for you and for your ego, it's going to hurt you. It's going to frustrate you. What I found is the people that get the best results are the ones that are most neutral. So if you're finding yourself maybe attached to a few old beliefs, we can work on that. We can work on it, and I'm here to help you guys to do that. We can work on being as neutral as possible, some exercises. You guys and girls know that I'm always here in the webinars, the live Q&A at the end, to go into as much detail as possible, especially about the subconscious, because we know that it is mainly a psychological game. Now, within Falcon, of course, we have the missing pieces to the puzzle of the skill set of the technical side. So you're going to be learning that and becoming an incredible trader, but we still have to make sure that the psychology is right and we get our mind right, that we're not wanting the market to always do things for us. We need to have those contingency plans. And for me, that's exactly how I've progressed over the years. So understanding that, I've been able to see, well, that's an impulse, that's a continuation, 6 to 8 hours mathematically. I can buy here, put my sell stop there, and then take the trade. If it doesn't give me that, and it gives me this type of scenario, a descending channel, a risk entry, even better. I get to buy that regardless. So that is the psychology behind it. And again, do some screenshots, forecast, add it into your routine as a nice little quick tip to finish off. I recommend even every single evening, let's say, for example, you've got your watch list and you're looking at pairs for the week, for example, and you're forecasting, make sure that every single evening, even if it's just for 10 to 15 minutes, reforecast what you initially planned. So let's say this trade hadn't happened yet and you were still forecasting it, reforecast, and it will only take you a few minutes on each one. So for example, if this was still corrected for a few hours, it was the next day, still forecast this, draw it with a paintbrush tool, draw it on, and just re-get it. You're just programming your mind so you're never shocked by the market. I do this all the time, and 15 minutes at the end of the day when you're going to look at the charts anyway, it's just a nice little habit and a routine and a nice little quick tip you can put within your overall trading plan. So I hope you've really enjoyed this episode. I wanted to go into a tiny bit more detail because I'm really passionate about forecasting, as you guys and girls know, because I think it's been a game changer for me and I've seen it for so many of you. So I hope you try this out, and I look forward to seeing your progression by forecasting the market and becoming a better and effective trader.